Good day everyone. Welcome to our first video lecture on ACP 311 Accounting for Special Transactions. In this particular video lecture, we will be discussing about partnership formation. This topic is under week 1 to 3 in your self-instructional manual. This topic includes unit learning objective of defining partnership and discussing the accounting for partnership formation. Now, this lecture will be divided into two parts. First part will that be of reviewing the concepts of partnership, and the second part will that be of discussing the procedures in forming a partnership. Okay, let's start. As we all know, partnership is one of the different options that an individual could opt when entering into business. To name a few of the different business organization that an individual may enter includes the very popular sole proprietorship, partnership, corporation, or others may opt entering into cooperatives. Now, partnership is very popular since partnership has an arrays of advantages as well as disadvantages compared to these other forms of business organization. So to start, we have here the definition of your partnership. By contract of partnership, two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing profits among themselves. This definition is an excerpt from Article 1767 of the Partnership Law. Now, this definition considers three important things. First, we have here the things that the partners could contribute. So we have here money, property, or industry. Again, partners may contribute money, property, or industry. And of course, a requisite for any other individual to enter into partnership or to create into partnership is at least there must be two or more persons binding themselves. So you cannot enter into partnership if you don't have any partners at all. That is why it's obviously called as partnership. And whatever income they have derived from that partnership will be divided among themselves. So in short, it's very important to consider these three main points in the definition of partnership. So first, we have contract. So partnership is a contract. Just like any other contract, partnership may be created continuing the formalities or without the formalities of a contract. So as long as there is a meeting of mind between two or more individuals, then therefore such individual may now enter and create a partnership. They do not actually require formalities just like any other contract. As long as these parties meet their minds in entering into partnership, and therefore they can already create partnership. Another two or more persons. So as what I've said earlier and can be observed in the partnership definition, you cannot create a partnership if you are alone. So requisite for you to enter into partnership or to create a partnership is that you should have a partner at least. And lastly, profits. These profits will be divided among themselves or among the partners at the end of a particular accounting period. The division of profits and the different ways on how are we going to distribute profits among the partners will be discussed in the next unit learning objective, which is the partnership operation. So in short, to consider the definition of partnership again, a partnership should, or an individual who wants to enter into partnership should create a contract and at least to secure a partner. And again, they should also have an intention of dividing the profits among themselves. So that is partnership. So this partnership has also its different characteristics. So in this slide, we have here 6 characteristics of a partnership. So the first characteristic is separate legal personality. Separate legal personality. In Article 1768 of Partnership Law, such law states that the partnership has a juridical personality separate and distinct from that of each of the partners. Therefore, the partnership can acquire properties in its own name and can enter into contracts. A partnership can acquire juridical personality the moment there's meeting of minds between the partners, since the partnership is created by a mere agreement of the partners. So again, separate legal personality, meaning the partnership that has been created is now separate from that of the partners. So therefore, for example, if A and B agreed to enter into a partnership, after the formation of the partnership, there will now be three legal personalities. First are the two personalities of the partners, partner A and partner B, and the separate personality of the partnership. So, iba ang personality ni partner A, iba ang personality ni partner B, and iba na din ang personality ni partnership itself. So, after the formation of the partnership, once again, there will now be three legal personality. And of course, if you could still remember the concept of separate entity concept meaning the affairs of the business should be kept separate from the affairs of the owners. So that could also come true in this context where all the affairs of the partnership can be separate or should be separate from that of the personal affairs of the partners. The second characteristic of partnership is ease of formation. The formation of partnership does not require as many formalities like in a corporation. The partnership may be created by a mere agreement between two or more parties, whether it is oral or written agreement. The most important is the consent between parties. As I have mentioned earlier um, in the definition of partnership, partnership is a contract, and take note that contract can be entered even without legal documents as long as there is meeting of minds. So, this characteristic of partnership compared with that of the characteristic of a corporation, it's obviously an advantage on the point of view of the business enterprises or business individuals who will venture into partnership than venturing into corporation because even entering into a partnership with just an agreement or even with even in just meeting of minds, they could already create a partnership, unlike with creating a corporation which really follows strict compliance from the different regulatories. So that's actually one of the different advantages of a partnership. The third characteristic of partnership is that of co-ownership of partnership properties and profits. It means all properties contributed to the partnership, including its fruits after contribution, become the properties of the partnership. Therefore, these are all co-owned by the partners. Now, co-ownership, it only stresses that whatever investment that is made by a particular partner in the partnership becomes a property of the partnership and all other partners already. So therefore, let's say A and B entered into a agreement to create a partnership and then A invested a land. After the investment and after the formation of the partnership, that particular land is no longer solely owned by A, but rather it's already owned by both the partners and the partnership. So that is co-ownership. The fourth characteristic of partnership is limited life. Limited life because um, the nature of a partnership is very sensitive. Even if you will just simply change a bit in the articles of partnership, then it will now dissolve the partnership. The partnership may be dissolved if there's any change in the partnership agreement, A partnership may also be dissolved upon admission of a new partner, death, withdrawal of retirement, or withdrawal of any partner. So, just like what I have mentioned earlier, that even in a small change in the articles of partnership, it may actually lead into the dissolution of the partnership. The fifth characteristic of partnership is that of mutual agency. So when we talk about mutual agency, each partner is a principal and also an agent of the partnership. Each partner has equal right to act and enter into contracts on behalf of the partnership provided that he acts within the normal scope of the business operations. But no one can act in the partnership without the consent of other partners. This is based on the principle of delectus personae. So it is also one of the different advantages of having a partnership because all of the partners would now become an agent of the partner. So, diba? There is a saying that two heads are better than one. So, it's actually better for a partnership to be run by many thinking people or thinking minds compared if you will just run it on yourself. So, partnership partners or partnership partners or the partners of the partnership can be considered as an agent of the partnership, meaning they could enter into activities in behalf of the partnership. But again, there is a restriction on that um, right of a partner being an agent of the entity. That partner should only act within the normal scope of the business operation. So, dili pod absolute ang iyang right na, for example, iyang ibaligya ang properties sa partnership for his or her own good. So, kana siya, dili man na siya regular course of the business. So, dili na siya legit nga activity. So, ang allowed lang ni partner buhaton as an agent of the partnership is katulang mga activities nga part sa daily due course sa partnership. For example, mangita og mga kliyente, mamaligya, or mangita og mga customers. So that is mutual agency. And the last characteristic of a partnership is unlimited liability. So this is not unlimited life, but rather unlimited liability. Unlimited liability except for the limited partners. So each partner is held reasonably liable for any partnership obligations if the partnership assets are not sufficient enough to pay its obligation. The partnership creditors can run after the personal assets of the partners. There's also an exception when the partnership created a limited partnership that partners are only liable to the extent of their capital contributions. So this unlimited liability is only applied on general partners because partners can be classified into two: general partners and limited partners. When we talk about limited partners meaning their liability is only up to the extent of whatever interest they have invested in the entity. Unlike kay general partners na general partners are liable up to the extent of their personal assets. So pasabot, kung kulang ang assets sa partnership, for example, mas dako ang liabilities kaysa sa assets, then the creditors of the partnership can no longer run after the personal assets of the limited partners. However, they can run after the personal assets of the general partners. So therefore, this unlimited liability na characteristic of partnership is only applicable to general partners because again, limited partners are only liable up to the extent of their investment in the partnership. So those are the 6 characteristics of a partnership. So again, we have separate legal personality, ease of formation, co-ownership, limited life, mutual agency, and unlimited liability. Now let's proceed with This one on and onwards, this will now be the discussion on the things necessary or the procedures necessary in creating or forming a new partnership. So this time, we will be discussing ledger accounts of the partners. So there are three ledger accounts that a partner will apply or will maintain in the books of the partnership. So first, we have capital accounts. Second, we have drawing or personal accounts. Third is accounts for loans or from partners. So let's discuss each of these ledger accounts. So una, we have there your capital account. Just like with your sole proprietorship and your corporation, partnership will also have its capital account, and its unique name is Partners Capital. So obviously, just like other capital, the normal balance in accounting for capital is credit. So meaning, all items that is located in the credit side of your Partners Capital's T account, that means this increases your partner's capital. So if you have original investment, additional investment, partners share in the profit, all of these increases your partner's capital. However, all of these things na naa sa debit side, these are also the circumstances or the activities that will make your partner's capital decrease. So, what are these? First, we have permanent withdrawal of capital. Second, we have debit balance of the drawing account at the end of the period. And third is partners share in the losses. The second account is that of your drawing accounts. Now, actually, this drawing account of the partner is only a temporary account because at the end of the accounting period, this drawing account will be closed in that of the um, capital account. So if you have noticed here, diri sa debit balance ni partner's capital, natay permanent withdrawal of capital or natay debit balance of the drawing account. So whatever ang debit balance diri as atong partner's withdrawal nga ledger will automatically be debited diri as ato ang partner's capital. So in short, pag naay debit balance diri sa ato ang partner's withdrawal, ang effect niya is deduction or reduction dito sa ato ang partner's capital. Okay? So, there is a partner's capital. Unsa man pud ang normal balance nato sa partner's withdrawal? Sorry. I mean, partner's withdrawal. What is the normal balance of partner's withdrawal? So, again, the normal balance of your partner's withdrawal or partner's drawings is debit. So, pasabot, all items that is located on the debit side in your partner's withdrawal account increases your drawings, and those items that is located on the credit side, meaning these are items that decreases your partner's drawing. So let's have one by one items that increases your withdrawals. First, we have withdrawal of assets by partners in anticipation of net income. So if the partner anticipates net income and then nag-withdraw na siya, or the partner is expecting an income tapos nag-withdraw na siya, so that withdrawal will be obviously be debited. So journal entry ana will be debit to partner's drawings, credit to cash. So later on, we will be discussing the actual journal entries to be recorded if ever these transactions will occur. So, ikaduha, we have partners, personal indebtedness, paid or assumed by the partnership. So, if ever there are liabilities which are assumed by the partnership, so such payment of liabilities by the partnership will also be considered as partners' drawings. And the third one, we have funds or claims of partnership collected and retained by the partner. So, those items na gisingil, for example, na ay ARC partnership pero ang nisingil si partner, and then ang iyahang napaningil wala niya gi-remit sa partnership, and such will be considered as partners withdrawals. So again, these three items considered as an increase in partners drawings. So ito naman, itong tatlo, partnership obligations assumed or paid by the partner, baliktad ni siya sa kani, baliktad siya ani. So meaning, na partnership obligation pero ang nagbayad is si partner. So that will decrease your partner's drawings. Another, we have personal funds or claims of partner collected and retained by the partnership. And lastly, periodic partners' salaries depending on the accounting and disbursement procedures agreed upon. So you should carefully familiarize all of these transactions because this all affects your drawing accounts. The, the next one is loans to and from partners. So usually we use loans to and loans from partners. If not all, most of the students are somehow confused on the term loans to and loans from partners. But again, to clarify things, loans to partners may be viewed as receivable of partnership from partners. This may happen just like when partners make a withdrawal of substantial amount or made an advances to the partners with the assumption of its repayment to the partnership. So in short, if there's loans to partners, that means there is a receivable on the part of the partnership. Ang naay liability si partner, ang naay receivable si partnership. Naay utang si partner, naay receivable si partnership. While loans from partners, it is the reciprocal of loans to partners. Here, in loans from partners, ang naay utang dariya is si partnership. Ang naay receivable is si partner. So again, loans from partners may be viewed as payable to the partners. This may happen just like when the partners made an advances to the partnership with the assumption of repayment to the partners. Okay, let's continue. So this time, let's now have the actual accounting for partnership formation. So there are three ways we could form a partnership. First is formation of partnership for the first time, meaning the partners are new in the business, meaning they don't have any existing business. They don't have any existing books of accounts. The second one is conversion of a sole proprietorship to a partnership. So in this second way of forming a partnership, it can be a sole proprietor with an individual and with no existing business. So that means the other party is with an existing business and the other party is new in the business. So they may actually opt to retain the business of the other partner and convert that sole proprietorship into a partnership. B, the second one, a sole proprietor with another sole proprietor. So in this second option, meaning the two partners has their own respective businesses already. So they may actually opt to enter into a partnership by dissolving all of their sole proprietorship, or pwede sila mupili kung kinsa ang ilahang i-continue nga business. For example, si A na i-business, si B na apoy business, and then they opted to enter into partnership. So pwede nga ang ilang option i-dissolve nila kay B, i-continue kay A, or pwede pod nga i-dissolve nila kay A, i-continue kay B, or pwede pod nga i-dissolve nila ang duha, and then they will create new partnership. They will establish new books of the partnership. And the third one is admission of a new partner. So this admission of a new partner will be discussed in the partnership dissolution. Okay, so let's start. We have the first way of creating a partnership or forming a partnership. We have formation of a partnership for the first time. So, upon formation of partnership, there can be cash or non-cash contribution. So, non-cash contribution, take note, must be recorded at its fair market value at the time of the contribution. Now, we don't have any accounting issues basta ang contribute ni partner is cash because automatic basta cash ang i-contribute ni partner in the partnership, the amount that will be credited to the partner is equivalent to the face value of the cash invested by that partner. So for example, assume that A and B each invests 100,000 cash in the partnership. So we don't have so much accounting issue here. So the entry to record the investment would just simply be debit to cash 200,000, credit to A capital and B capital for 100,000 respectively. Since the amount they have invested is 100,000, so automatic the amount to be credited to their capital is 100,000 each. So again, if the partner invested cash, the amount to be credited is equivalent to the face value of the money they have invested. However, again, if the partner invested non-cash assets, so what are examples of non-cash assets? Let's say they invested property, plant and equipment, machinery, land, and etc. So their capital will be credited equivalent to the fair value of the date of contribution or on the date of investment. So example, assume that Dan and Mar form a partnership for the first time. Their investments are as follows. So si Dan invested cash. So we don't have any problem here because it will be recorded at face value, 70,000. But Mar invested non-cash assets. It invested merchandise inventory and computer equipment. Merchandise inventory has a cost of 10,000, but its fair market value is 20. So therefore, it will be recorded at 20,000. Another, we have computer equipment with a cost of 50,000. But again, it has a fair value of 30,000. So therefore, it will be recorded at 30,000 as well. So in total, Dan will be credited a capital of 70,000 and Mar will be credited a capital of 50,000. So the journal entry to record that investment would include, on the point of view of Dan, debit cash credit to Dan capital for 70,000, the face amount of the money. And journal entry to record the initial investment of Mar using the fair values of the property it has invested, debit merchandise inventory, debit computer equipment for 20,000 and 30,000 respectively, and then credit to Mar capital for 50,000. So again, it's basic na understanding, basic knowledge that if you will be recording investments with with non-cash assets, these non-cash assets will be valued at the fair value. Sorry, it will be recorded or it will be valued at fair value on the date of investment. That should be very clear. Okay, how about this time there is capital credit not equal to the net asset invested. What do we mean by capital credit is not equal to the asset invested? Meaning, ang gi-credit sa imuhang account may be higher or lower than the total net assets you have invested in the partnership. So that could be an accounting problem. So, there's problem in the valuation of the capital credit is not equal to the net asset invested. To resolve this situation, the capital accounts must be adjusted using the following methods. So we could actually follow bonus method or goodwill method. However, just to tell you in advance, what is used in practice is bonus method. And if the problem is also silent on which method will be followed, we will always use bonus method. Okay? For example, in the above illustration, the partner agree that each partner is to receive equal interest. So meaning they should be credited with equal interest. Even than investing 70,000 and Mar investing 50,000 in identifiable assets. So in this case, if we will follow basic accounting, Dan should be credited by 70,000 capital dapat kay 70 man ang iyahang gi-invest, and then si Mar 50,000 lang dapat ang iyahang makredit sa iyang capital because it only invested 50,000 in identifiable assets. But however, the agreement does not say so. What the agreement has said is that they will be receiving equal interest. So therefore, Dan and Mar will receive equal capital interest. So how are we going to account for this? So under bonus method, no assets are recorded in the partnership books. To equalize the capital balance to 60,000 each, 60,000 each since if you will add 70,000 and 50,000 is 120, divide it into 2 to become 60. So therefore, ang makredit lang dapat kay Dan, ang makredit pod kay Mar dapat is also 60,000. So it will now negate with our earlier journal entry or the should be journal entry nato nga dapat na i-debit na asset credit to Dan capital nga 70,000 and then na i-debit nga asset credit to Mar capital nga 50,000. So ma-deviate to siya nga journal entry because of this agreement nga they should share 60,000 each. So from that 70,000 ni Dan, ato siyang ibalhin kay Mar. So again, normal balance ni capital is credit. So since ato amang tanggalan og 10,000 si Dan, so Dan capital will now be debited, and then since ato mang dungagan og 10,000 ang 50,000 ni Mar nga investment ganina, so therefore we will credit Mar capital of 10,000. So ang journal entry will now, for that accounting issue, will now be debit to Dan capital 10,000 and then credit to Mar capital of 10,000. It is to accomplish equal interest of 60,000 by recording a 10,000 bonus from Dan to Mar. So again, si Mar diri karon ang nakarecognize og bonus. Nakarecognize siya og 10,000 bonus because ang iyang gi-invest is only 50,000 but it actually credited a 60,000 capital. So that could actually be possible. The justification for that is that in the entry above, Mar received a capital balance of or capital bonus of 10,000 from Dan in recognition of a business connections he brought into the partnership. So, because of the influence he could give in the partnership, gihatagan siya og bonus nga 10,000. So everything is now going to its places, or everything is following now the agreement nga dapat ang ilang capital will be equal to 60,000. So dili na 70 kay Dan, dili na pod 50 kay Mar, but rather they will now have 60,000 capital balances. So that's under bonus method. So again, under bonus method, no assets are recorded in the partnership of the books. However, under goodwill method, the second method in accounting for that concern where capital accounts is not equal to the net assets invested. So in this goodwill method, the equalization of capital interest is accomplished by recording goodwill of 20,000 in corresponding increase in the capital account of Mar. So earlier, 'di ba, we have mentioned na there is a significant connection si Mar. So therefore, in this case, MAR will be given an additional 20,000 to its capital as if MAR has invested goodwill in the partnership. So that is why under goodwill method, there is an intangible asset that is being recognized in the partnership. So there is a recording of goodwill in lieu of that connection of MAR. So in this case, the capital interest of MAR this time will now be 70,000 after the recording of goodwill. So after that, see, Dan and Mar will now have an equal balance of 70,000. So again, the goodwill method is based on the assumption that an implied value can be estimated mathematically and recorded for any intangible contribution made by a partner. Bonus method recognizes only the assets that are physically contributed to the partnership, while goodwill method considers the implied value of intangible contribution. The partners may agree on which method is to be used, but in the absence of any agreement, bonus method is preferable than goodwill. So that should be clear. If the problem would tell you to use goodwill, then we have no problem. If it tells you otherwise, then we have no problem. And then if the problem is silent as well, always remember to use bonus method. So that is our first way in forming a partnership. Formation of partnership for the first time. Okay, let's proceed to the next one, which is formation of partnership with existing business. Okay, the second way of forming a partnership is that formation of a partnership with sole proprietor and an individual with no existing business. Pasabot, ang isa ka partner na anay business daan and ang isa ka partner is without existing business. So, an individual with no existing business may join another individual who has already an existing business. In this type of formation, the assets and liabilities of the sole proprietor are transferred to a newly formed partnership. The partners may opt to revalue the assets and liabilities before it will transfer to the newly formed partnership. The journal entries to record this type of formation will depend on the following conditions. So the first, so before ano daw, before forming a partnership, si sole proprietor nga nanay business daan has the option of revaluing its assets and liabilities before siya i-transfer into the new books. Okay, the following conditions are as follows. The books of the sole proprietorship are to be used for the newly formed partnership and new books are to be opened. So these are the three conditions para na ay revaluation of assets and liabilities nga mahitabo. Okay, for example, assume that Dan has been operating a retail store for a number of years. A statement of financial position on July 1, 2020 is prepared for Dan Company. So kani mo daw ni ang financial position ni Dan Company. So naa siya total assets of 216,000 and total liabilities and equity of 216,000. Now, Dan needs additional capital to meet the increasing sales and offers Mar an interest in the business. Dan and Mar agree to form a partnership to be known as DM Partnership. Dan business is audited and its net assets are appraised. So meaning there is an appraisal on the net assets. So meaning there's a need for revaluation. The audit and appraisal shows the following. So mo na ni sila karon ang mga subject to adjustment. So mo na ni ang mga assets and liabilities nga i-revalue. So first we have allowance for doubtful accounts of 5,000 is to be provided. Another, inventory is to be reported at its market value of 80,000. The equipment has a fair value of 35,000. So meaning, ang equipment daw will now be recorded to its new fair value of 35,000. So whatever accumulated depreciation for this equipment in the old books will be closed, and it will now be continued with a new phase or new carrying amount of 35,000, and 2,000 of accounts payable has not been recorded. Dan and Mar prepare and sign articles of co-partnership that include all significant operating policies on July 1, 2020. So Mar contributed 100,000 cash for one-third capital interest. Take note, si Mar naghatag daw siya og 100,000 for one-third of the capital interest. So DM partnership is to acquire all Dan's business and assume its liabilities. So, ang DM partnership will acquire all Dan's business and assume its liabilities. So, ang net assets ni Dan ug ang iyang liabilities ma-absorb ni DM partnership sa ilang newly created partnership. Now, here's the accounting. So, sole proprietor books are retained for the partnership. So, pasabot, ang business ni Dan magpabilin, and it will be carried forward using the name of the partnership. So if the books of Dan are to be retained, the following procedures must be used to record the partnership formation. Una na to na step is to adjust the assets and liabilities of Dan to their fair market values agreed by the partners. So earlier, na naman to yung mga provisions nga gi-provide nga appraisal sa assets and liabilities. So una is you just simply record it para mahimo na siyang, para ma-value na siya at its appraised value. So, una, we have inventory of 10,000. So, unsa di nahitabo? Unsa di ay nahitabo? We have inventory is to be reported at its market value of 80,000. So from pila di ay ang inventory. So from 70,000 nahimo siyang 80,000 ang inventory. So from inventory nga 70,000 dara nahimo siyang 80,000. So therefore there is an increase in inventory. So debita inventory for 10,000. Okay, debit 10,000. So another is I actually have here an example or on a worksheet on the existing balance sheet of that and the adjustment made by that appraisal. So, wala man tayo problema sa cash, kaya wala man na-change ang cash, ang accounts receivable, wala nag-change, pero nag-provide lang tag allowance for bad debts nga 5,000. So, natin allowance for bad debts nga 5,000. And then, ang inventory nato from 70,000, nahimo ng 80,000. And then, ang atuang equipment will now be recorded at ang equipment will now be recorded at 35,000. So therefore, from 40,000 nga equipment, mahimo siyang 35. So from 40, mahimo siyang 35. And then, kaning 4,000, it will be closed. Ma-close na ang accumulated depreciation sa equipment kay as if man nga mag-start og new ang business. So ang new carrying amount or new fair value of that equipment is 35,000. So another is katong iyang accounts payable nga tungagan daw og 2,000. So in short, the journal entry for that adjustments would include debit to inventory for 10,000. So, i-close nimo ang accumulated depreciation kay mawala naman si accumulated depreciation nga 4,000. And then, equipment nga 5,000. Credit kag equipment nga 5,000 kay sa record nimo naa pa kay equipment nga 40,000. Unya ano na lang man daw siya, ma-reduce siya into 35,000. So, 40,000 minus 35,000. So, naka-adjustment ng equipment for 5,000. Another, we have allowance for bad debts. So, kailangan daw nimo mag-provide og allowance for bad debts as per agreement. So, credit ka allowance for bad debts for 5,000. And then, na daw kay unrecorded nga accounts payable for 2,000. So, unrecorded, so meaning it will be added to your total liability. So credit to accounts payable of 2,000. And then you have your balancing figure diri si Dan Capital. So you have total debits of 14,000 and then credits of 5 plus 5 plus 2. So that's 12,000. So 14,000 minus 12,000. So there is net increase of 2,000 to the capital of Dan. So therefore, we will be crediting 2,000 to Dan capital. So this is your journal entry to record the revaluation of the assets of Dan before it can be carried to the new books of the partnership. And the second one, we have the journal entry of the investment of MAR. So as mentioned earlier, MAR will be investing cash of 100,000 for one-third interest of the partnership. So journal entry would include debit to cash for 100,000 and then credit to Mar Capital for 100,000. So in short, to make your lives easier, so I have prepared worksheet nga diri So this is the existing balance sheet of Dan with 216,000 nga total assets and total liabilities. So we will now take effect the adjustments of the revaluation of the liability and the assets plus the investment of MAR. So after the formation or initially at the beginning of the partnership operation, it will now have a total assets of 320,000 and a total liabilities and equity of 320,000. So we have a total cash of 160,000, so that's 60. Existing cash daan ni Dan plus ang katong gi-invest ni Mar nga 100,000, so 160,000 tanan. Accounts receivable, 50,000 pero nag-recognize na taog allowance for bad debts diri as per provision earlier. So 5,000. Inventory from 70 na himong 80,000 because we have an adjustment of 10,000. And then your equipment will now be recorded at 35,000 and then your accumulated depreciation since gi-close naman nato ni kaganina, it will now have a zero balance after the formation. And then we also have here accounts payable, existing na 86, and na unrecorded na 2,000, so that becomes 88,000. And then done capital, 130 existing, plus na ay net effect nga increase in capital due to valuation of assets and liabilities. So mo na nga ang existing done capital karon will be 132,000 and 100,000 for Mar, magikan sa 100,000 niya nga investment of cash. So at the beginning of the partnership year, it will now have a 320,000 asset and 320,000 nga liabilities and equity. So mo na ni ang iyang balance sheet. Mo na ni ang balance sheet ni DM partnership at the beginning of the formation or after the formation. Okay? Okay, from the worksheet earlier, so this will now be the picture of the statement of financial position of DM partnership. So meaning, dili na ni katong old business ni Dan, but rather it's already the partnership of Dan and Mar, DM partnership. So they will now have 320,000 assets and combination of liabilities and equity. So gikan na siya diri as ato ang worksheet. Gikan na siya diri as ato ang worksheet. So 320. So after that, ano siya? Yahang financial position of the new partnership. Okay, let's proceed with the next one. So we have formation of Partnership, still with sole proprietor and an individual with no existing business. But diri new books are open for the partnership. So pasabot, katong kay Dan, katong previous nato na example, ato lang gi-continue ang books ni Dan. Wala nato gi-close ang books ni Dan. Kay ano man ta, gi ano lang, gi-assume sa partnership ang business ni Dan. But dali na daw new books are open for the partnership, meaning ang books sa existing business kay gi-close before nag-open og book sa new partnership. So, if new books are to be closed or if new books are to be used for the partnership, the following accounting procedures may be used to record the formation of the partnership. So, una, adjust nato ang assets liabilities ni Dan using the agreement and then i-close nato ang books. And then, record the investments of Dan using its assets and liabilities, and then record the cash investment of Mar. Ang nahitabo kaganina, wala na to gi-close ang books ni Dan. Kaya ato man siyang gigamit, mo man ang gigamit ni partnership. But diri there is new books nga i-open ni partnership. So kailangan na to i-close ang books ni Dan and then create new books of the partnership. Okay. So, assuming using the same illustration earlier, so this will now be the journal entry to adjust the books. So mo ni ang journal entry to adjust the books, and then mo ni ang journal entry to close the books or to close all the adjusted balances of the accounts. So let's have this one. So, mo ni siya tong nahitabo kaganina katong adjustment. So, natay inventory nga 10,000, accumulated depreciation nga 4,000, and then equipment na 5,000, allowance for doubtful accounts nga 5,000, and then accounts payable nga 2,000, and then na-increase nga 2,000 kay Dan capital. Okay? So, after the adjustment, what happened to the total capital of Dan? Pilagay ang total capital ni Dan after the adjustment. So after the adjustment, na ay existing capital si Dan nga 130 and then plus 2,000 nga net increase na himong 132,000 ang iyahang net capital. So balik ta, 132,000 na ang total capital ni Dan. 132,000. And then, ato na daw i-close ang iyahang books of accounts. So, unsaon pag-close? So, bayaran ang mga utang and then i-close iyahang doubtful accounts. So, na siya'y total utang na 88,000. So, si 88,000, gikan na siya dito kay 86,000 plus 2,000 earlier. And then, i-close na to ang allowance for doubtful accounts na 5,000 kay nag-recognize man daw tag 5,000, so ato na siyang i-close. So, debit allowance for doubtful accounts. And then, i-close na to ang tanan mga assets. So, unsa ang mga assets nga nabilin? So, na assets nga cash for 60,000, accounts receivable nga 50,000, and then inventory nga 80,000, and then equipment nga 35,000. So, imuha ni silang ibangga ang kaning 88 plus 5,000, and then ibangga pud nimo ang total assets. So, ang mabilin dira will be the balancing figure of Dan capital. So, you will have 88,000 plus 5,000 minus 60,000 minus 50,000 minus 80,000 minus 35,000. And that will be credited to Dan capital. And this is actually not credit. Okay, this Dan capital should not be credited but rather it should be debited dapat. So dapat kay ano man siya, ato naman siyang i-close Dan capital. So i-close na nato ang Dan capital nga 32,000. So again, dapat si 132 naka-debit. So to close all the adjusted balances of the account, so debit ta accounts payable for 88,000 para ma-close nato ang liabilities. I-close pud nato ang allowance for bad debts na 5,000 and then close nato si cash. So credit nato 60,000, accounts receivable 50,000, inventory 80, and then equipment of 35,000. And then pagbangga nimo ani 60, 50, 80, 35 kay 88 og 5, then makakuha ka og 132,000. So dapat kanang 132,000 dapat naka-debit na siya. Kay ang normal balance man kay capital is credit. So i-close pag-close nimo dapat naka-debit na siya. So again ang rule pag mag-close, you debit all credits and you credit all debits. So ang first na step nato is nahuman na. First is to adjust and then ang ikaduha, i-close nato ang mga accounts. So the next one is to form the new books of the partnership. So diri mag-form na ta og new books. Okay, to record the investments of Dan, so diri ang record nato diri is katong mga existing assets and liabilities. So ibalik na pud nimo siya. So katong assets ug liabilities dito after the revaluation sa books ni Dan, imo na pud siyang i-re-establish. So debit na pud ka diri cash 60,000, accounts receivable 50,000, inventory of 80,000 and then equipment to 35,000. And then credit to accounts payable for 88, allowance for bad debts nga 5,000 and then Dan capital nga 132,000. This is not 123,000 but rather 132,000. Okay? So that is to record the investment of Dan. And the second one is to record the cash investment of Pedro. Wala tayo problema diri So debit lang tag cash nga 100,000 and then credit to Mar Capital for 100,000. So after this entry, maka-create na ta og bag-o nga maka-create na tag bag-o nga balance sheet. Actually, ang balance sheet ani ug ang balance sheet kaganina parehas lang. So parehas lang siya kinalabasan diri It's just that ang nahitabo diri sa kani nga example or kani nga illustration, ang books ni Dan gi-close tapos nag-create na pod og another book sa partnership. Ang kaganina gidiretso na ang books ni Dan wala na gi-close, mo na ang gi-follow ni partnership. Pero again, ang output niya will just simply be the same. Nalang gihapoy capital si Mar nga 100,000 and then naay capital si Dan nga 132,000. Just like the balance sheet earlier nga gi-present after the formation of the partnership. So after that, mo na ni ang mahitabo. Mo na ni ilahang new balance sheet na records. Financial position of the partnership. Dan will have 132,000 nga capital and then Mar with a capital of 100,000 as well. So same lang jud siya. It's just that ni shortcut lang ang una kay wala man gi-close ang books ni Dan. Ang ikaduha, gi-close ang books ni Dan tapos nag-open og another books. So ang second nga illustration ang medyo lengthy kay moagi pa man ka og closing of books of the existing partner. Pero at the end of the line, parehas lang gyapon sila og kinalabasan. Nalang gyapon sila total assets of 320,000 at the beginning of the formation of the partnership. Okay, let's proceed to our last topic, formation of partnership with two sole proprietors. So, two sole proprietors pasabot, si Dan, for example, gamiton gihapon nato nga example si Dan ug si Mar diri Si Dan karon ug si Mar are both with existing partner, with both existing businesses. Kaganina, si Dan lang ang business, si Mar wala. Pero diri karon, both of them na ay businesses na. So the accounting procedures in the preceding discussions are also applicable when two or more proprietorships join together to form a partnership. Books of one of the sole proprietorships may be used for the newly formed partnership, or the new set of the partnership books may be used. So, parehas lang siya gihapon guys, ganina og concept nga una, pwede nga gamiton ang books ni Mar. For example, kaganina, for example, na ay business si Dan, si Mar wala. So pwede nga ang gamiton nga books i-continue ang kay Dan. Or pwede pod nga i-close ang kay Dan and then mag-create og another books of the partnership. So diri since duha naman ang naay business, pwede nga i-continue ang kay Dan, pwede i-continue ang kay Mar, or pwede nga i-discontinue ang duha and then create a new books of partnership. So kani siya, mas dugay ni siya mahuman ang accounting kay duha naman ka books. If ever mag-create ka og new books for the partnership, duha na ka books ang imuhang i-close. But again, in order for us to um, climb the mountain, we need to follow its trails. So, bisan pagtaas siya, kailangan din nato sundon para maabot nato ang asa nato. Ang asa nato gusto. So, sige. We have here illustration 3. So, assume that on July 30, 2020, Ba and Be, competitors in business, decide to consolidate their businesses to form a partnership to be called BB Partnership. The statement of financial position of Ba and Be on this date are presented below. So naa siya diri mo ni ang FS financial position ni Ba sa wala pa sila nag-combine. So mo ni ang kay Ba. So naay 29,000 nga total assets si Ba, napoy 29,000 nga liabilities and equities. And then napoy separate nga FSCB. Napod siya 31,000 nga total assets o 31,000 nga total liabilities and equity. So, itong ingon ako kaganina, pwede nga ang i-follow isa sa ilaha. Pwede ang i-follow kay Ba, pwede i-follow kay B. So, kung i-follow kay Ba, i-close na to ang kay B. Pero kung i-follow na to ang kay B nga FS, i-close na to ang kay Ba. Or kung wala gyud i-follow sa ilahang duha, ang both FS, kang Ba ug kang B, will be closed. Parehas sa nahitabo kaganina nga nag-create og bag-o nga partnership books. So therefore, gi-close na nato ang books ni Dan. And then, na ano dayon ta nag-create og new books of the partnership. So, same lang sila og accounting procedure diri. So una, you have here the provisions, the conditions agreed by the partners for the purpose of determining their interest in the partnership are presented below. So una, 10% of the accounts receivable is to set up as uncollectible in each account. So meaning, there will be recognition of uncollectible accounts equivalent to 10% of their respective AR. And merchandise inventory of kay Be lang niha is increased by 1,000. And then the furniture and fixtures of Ba and Be, both Ba and Be, are to be depreciated by 600 and 900 respectively. Okay. Unsa man na process atong gamiton? Una, example, books of Be are used as the partnership books. So since kay Be man ang gamiton, i-close na to ang kay Ba. Okay? So, if the books of Be are to be used as partnership books, the accounting procedures to record the formation of the partnership are first, diba, kay Be man natong gamiton, so i-close na to kay Ba. Pero before na to i-close, ato sa siyang i-adjust. Adjust the accounts of Ba using these provisions. Kani. Adjust the accounts of Ba as agreed. Adjustments are made to his capital account and then close the books of Ba. And then, para kay Be, magpabilin kay Be kay mo man daw ang gigamit, mo man daw ang gamitan sa partnership. So, adjust the accounts of Be as agreed. adjustments are made to his capital account. And then record the investment of Ba, his adjusted assets and liabilities. So after nimo ma-adjust, record na nimo ang total assets and liabilities ni Ba nga na close. Yeah, let's do this. Okay. Una gani, we will be adjusting the books of Ba and then close it. So the journal entries to record the formation of the partnership using the above accounting procedures include first, to record the adjustment of assets. So unsa man ang adjustment nato diri para kay Ba? Unsa ang mga adjustments nato para kay Ba? So 10% AR is to be recognized as uncollectible and its furniture and fixture will be depreciated by 600,000. So, dapat mag-recognize tayo ng allowance for doubtful accounts ng 1,000 which is equivalent to 10% of its accounts receivable and then mag-recognize po daw ta og depreciation for furniture and fixture. So, in short, we have a total adjustment sa kaniyang capital nga 1,600. So, we have a total capital of 1,600. Okay. After this, ato na dayon siyang i-close. Ang tanan niyang mga assets, atong ipang debit, ang tanan niyang mga liabilities, atong ipang, tanan niyang mga assets, atong i-credit, kay i-close man nato, and then tanan niyang mga liabilities, allowance for bad debts and accumulated depreciation, para ma-close atong i-debit. And the balancing figure will that be its capital account. Okay, so na siya cash, debit cash, 5,000. Kaning mga figures diri, gikan ni didto sa iyahang balance sheet. So cash nga 5,000, accounts receivable nga 10,000, merchandise inventory of 8,000, and furniture and fixtures of 6,000. And then i-close pud nato ang iyang accounts payable nga 3,000. And then allowance for bad debts nga naka-credit ganina, since ato man siyang i-close, ato siyang i-debit. Same will be applied sa iyang accumulated depreciation nga 6,000. Therefore, natay total capital nga i-close nga 24,400. Nay total capital nga 24,400. Okay. By the way, later on, pag recognize nato sa books, kanina mga items, mura gyapon ni ang atong gamiton pag-establish karon sa books of the new partnership. Okay, recap lang before we move on with the recognition of journal entries in the new books of the partnership. Ang buhaton una, adjust based on the agreed provisions. And then second, close the accounts of books since kay be man ang ato ang gamiton, dili man kay ba. So those are the procedures. Okay, this time we have books of be. New books of be. Now books of the partnership. But this time, since naman gihapoy provisions nga adjustments, ang atong unang nga buhaton is i-adjust na pud nato ang books ni be. So, again, na-increase sa iyahang merchandise inventory nga 1,000 kay be. And then, na allowance for bad debts nga 800,000 which is equivalent to 10% of its accounts receivable. And 900,000 nga depreciation para sa iyahang furniture and fixtures. So therefore, we have a total decrease in its capital of 700,000. So na a total decrease from that valuation. Ang valuation of its assets and liabilities leads to a decrease of 700,000 sa iyahang total capital. Now, let's move with the recording of investment ni ba. Kaganina, investment ni ba. Kani dili na nato i-close ang books ni be kay makontinue naman mo naman ang new books of the partnership. Ang buhaton na lang nato sa books ni be, ato na lang siyang i-adjust. Dili na nato siya i-close. Ang next nga journal entry nato is to record the investment of ba. So kani siya gikan ni didto sa mo ni ang mga items nga imong gi-close didto sa books ni ba. So we have katong imong mga gipang debit didto katong ang imong gipang debit didto sa closing entries sa books ni ba, imong ipang credit diri Ang tanang debit didto imong ipang credit diri Okay? So we have debit to cash for 5,000, accounts receivable 10,000, merchandise inventory 8,000, furniture and fixtures of 5,400, and then we also have accounts payable for 3,000, allowance for bad debts 1,000, and back capital for 24,400. Now, after this entry, kaning first entry ug second entry, maka-create na ta karon og FS sa part new partnership, balance sheet sa new partnership, which is still the books of B. Ato lang gi continue o gamit as books of the partnership. Okay? Okay, same process lang pud ang buhaton if ever ang option diri kay B na pud ang i-close tapos kay ba na pud ang i-continue. Press lang siya, baliktaron lang nimo. Kay B na pud ang imong i-close tapos kay ba na pud ang imong i-continue. Same process will be applied. Nagkambyo lang sila. Instead of B, si ba na pud ang imong i-continue, si B na pud ang imong i-close. So that's formation. That is formation of partnership with two sole proprietors nga ang books of the partnership gikan lang sa either one of the two sole proprietors. Ang next nga example is kani mo ni ang pinaka-lengthy kay ang duha ang imong i-close. Ganina isa lang ang i-close karon duha na gyud kay mag-create na ka og another new book of partnership. So the following procedures may be used to record the partnership formation pero ang amounts ani guys kay parehas ra gihapon ni amounts or mga figures nga manggawas. It's just that the process will be different. Mas taas ni siya nga proseso. But the end point, it will just give you the same amount or the same figures in your statement of financial position at the end of the formation of your partnership. So the following procedures may be used. Una, adjust the accounts of Ba and Be according to their agreement. Adjustments are to be made to their capital and then close the books. Sila duha. I-adjust nimo and then i-close nimo ang books. And then, sa new book of the partnership, i-record nimo ang investment ni Ba using his adjusted assets and liabilities, and then i-record nimo ang investments ni Be using his adjusted assets and liabilities. Actually, no need to discuss na ni siya kay paulit-ulit lang ang proseso. No? Pero for formalities, let's just finish this. Using the accounting procedures, the journal entries to record the formation of the partnership under these assumptions are as follows. So, una, ato nang i-adjust kay ang books ni Ba, tapos atong i-close. So, gidiscuss naman nato ni kaganina ang adjustment kay Ba. And then, gidiscuss na po nato ni kaganina ang closing of the books ni Ba. So, same lang ni kaganina. Same lang yan. And then, same will happen kay Be. Adjust nato kay Be. And then, kaganina, wala man to nato gi-close ang kay Be. Kay, gi-continue man nato ang kay Be. So, this time, ato nang i-close kay Be. So, i-close nato kay Be. Same lang gihapon ang rule pag closing entry. Lahat ng mga assets, i-credit. Lahat ng mga liabilities or lahat ng mga na ay normal balance nga credit imuhang i-debit para ma-close sila. So, that's the rule in closing entries. So, after that, maka-create na ta og new books of the partnership. So, gikan sa books ni Ba, baliktaron lang pud nimo, siya actually, is gibaliktad lang nimo ang closing entries ni Ba. Gibaliktad lang nimo. So, if you have noticed, gibaliktad lang na siya. Kaning mga debit diri naka-credit ni siya dito sa closing entries ni Ba. Nya kaning mga naka-credit, naka-debit ni siya dito sa closing entries ni Ba. Same kay Be. Ha? Kani si Henry, si Ben na siya wa na edit. si Henry, si Ben na siya. Same lang na sila og figures. Until such time nga maka-create na ta og FS, particularly statement of financial position at the end of the formation of the partnership. These are already the combined assets and liabilities of both partners, Ba and Be. They will now have a total cash of 9,000, AR of 18, and then allowance for doubtful nga 1,000, merchandise inventory nga 19, furniture and fixtures of 13,500. And then, we have accounts payable nga 9,000, Ba capital of 24,400, and Be capital of 24,300. Okay guys, correction. So, kaning 1,000, dili na dapat 1,000, dapat ano ni siya, 1,800. Dapat 1,800 na siya. Kay gikan man na siya diri Kanang 1,000 dira gikan siya diri. Gikan siya kay allowance for budgets nga 1,000 plus allowance for budgets nga 800. So instead of 1,000 dapat 1,800 na siya. So dapat ang figure dira ano siya dapat 18,000 minus 1,200. So dapat ano siya 16,800 dapat 16,800 16,200 16,200. So until such time that they will have a total assets of 57,500 57,700 and total liabilities of 57,700 as well. Again this is not 1,000 but rather 1,800. So that's it. So naka-create na ta og financial statement at the end of the formation of the partnership. We have already created a partnership, and then we have established already the concept on how are we going to prepare journal entries upon forming a partnership, particularly on different scenarios. For example, walay business ang tanan partners, tapos pwede po nga isa sa mga partners na i-business, pwede po nga tanan partners na i-business, mamili lang ka kung kinsa ang i-continue nga books or wala ba kay pilion sa ilaha kay mag-create ka og another books of the partnership. We just have some important notes that's presented here. Note that the partnership is an accounting entity separate from each of the partners and that the assets invested are recorded at their current fair values at the time of formation. It's just a sort of recap of what we have discussed earlier. No accumulated depreciation is carried forward to the partnership. So therefore, lahat ng accumulated depreciation nimo will be closed. No? All liabilities are recognized and recorded. The capital of the partnership is the sum of the individual partners' capital accounts and also the value of partnership's net assets. The fundamental accounting equation assets less liabilities equal capital is used often in partnership accounting. So that's true. Assets minus liabilities is equal to your capital. And lastly, each partner's capital interest recorded does not necessarily have to equal his capital contribution. It's the issue on goodwill and bonus method. The partners may decide to divide the total capital equally regardless of the actual contributions. The key point is that the partners may allocate the capital contributions in any manner they desire. The accountant must be sure that all partners agree to the allocation and must record it responsively or accordingly. So what's true here is that there should be proper agreement. What's the key here is that all partners will agree at all times kung unsa ang mahitabo sa partnership. Because again, it will still boil down that partnership is meeting of minds. It is created due to meeting of minds. So I guess that's the end of our video lecture. So if you have any questions regarding this video lecture, you may refer it to our LMS account, whether you can use your Creeper account if you have already your Creeper account, or your Schoology for the meantime, or you may actually refer it directly to our respective group chats. And again, I hope that we have achieved our objective for this video lecture, which is to revisit the context of partnership and to familiarize the different procedures in forming a partnership. That's it, and see you in our virtual class. Bye!